Good afternoon. Great to see everyone here. My name is Jonny. I'm a founding partner at Marble. Just a quick word on what we do. We're a climate tech venture studio partnering with scientists, engineers, and operators to build new climate tech startups that slash emissions and cool the planet. And I'm super excited to be joined by an amazing panel of climate tech investors and experts. I'm going to do my best over the next 45 minutes to get all their collective knowledge into your ears over this panel. So I'm going to let them introduce themselves. Eric?
Hello, everyone. Glad to see that there are so many people. I see people in the corridors here. Sorry for you. Welcome today. Yes, my name is Eric Dusseux. So I'm a venture partner at Breakthrough Energy Venture, which is a fund fully dedicated to climate tech, working on 5 verticals: agriculture and food, buildings, manufacturing, transport, and energy. We have the portfolio a bit more than 100 companies right now, early stage, seed to Series B. And it's a fund that was in fact inspired by Bill Gates, and he's one of our main LP. And it's a fund unusual because it's a 20-year maturity. So we're helping and supporting companies on a daily basis, not only investing.
Thanks, Eric. Yeah.
Hey, everybody. It's a pleasure to be here. My name is Yair. Reem. I'm a partner at Extantia Capital. Extantia is a climate-first venture firm. We have 2 types of funds. One is a fund of funds that we're investing in other climate like-minded funds. And the main thing that we're doing is a direct investment. We have 100 million, 50 billion fund that's the second fund that we're having. Direct investments in Europe, early stage companies that are all dedicated to decarbonization.
Thanks, Laurie.
Hi, everybody. So I'm Laurie, founding partner at One Ventures. We are an early stage venture capital firm based in San Francisco, focused on helping humanity become a net positive to nature. Concretely, we do early stage deep tech investments leading to disruptive unit and environmental economics. We started operating in 2020. We've made 35 investments so far, and we have $360 million under management. Excited to be here.
Amazing. Excited to have you. So let's cast our mind back not too far. 2022, what a crazy year. Markets went all over the place. Venture capital kind of stopped investing, or they would have you believe. But climate tech seems broadly to have been insulated from some of these wider trends. What are you seeing now coming into 2023? What's the state of affairs? What can founders expect coming into this year in terms of deployment, round sizes? How are you visioning 2023 as investors in the space?
I believe 2022 will be very exciting. In fact, as you said, 2022 was a disruption, in fact, for us. In EU, just that you realize, the investment, in fact, was minus 14% compared to 2021, but the early stage was an increase, in fact. Seed moved from 600 million to 1.1 billion for EU 27 countries. Series B increased by 35%, but the rest, late stage, was more difficult scaling up. So, as you know, there's an energy crisis. Europe reacted very well with Repower EU very fast. At the beginning of the year, in January, we had this net zero industrial plan, which is basically trying to put in place a sovereignty fund for Europe, which is great. We'll try to attract some funding for clean tech, obviously. And now we have with this Green Deal industrial plan that has been discussed and presented in February, a few days ago. And today, Ursula von der Leyen is discussing with Joe Biden on the way Europe will react on the Inflation Reduction Act, which is a good move for clean tech. But obviously, for the European industry, we need a strategy. So a very exciting year to come. I'm glad that in 2022, the VC industry at the early stage was ready. We need some more vehicles for the scaling up.
Yeah, and some great points I want to dig into a bit there. Let's start with the IRA specifically. Laurie, I know you were based over in the Valley. Explain to us, what is the IRA? Why is everyone talking about it? Why is it so interesting when it comes to climate tech? And then we're going to dive into what Europe's going to do about that. But let's start with the IRA.
Yeah, so quickly on the IRA, so the Inflation Reduction Act, it's a law which was passed last summer in the US and pushed by the Biden administration. It's a set of social, infrastructural, and environmental tax credits, loan, and grants. But just for the environmental piece of it, we are talking about $400 billion that will be spent on climate tech in the next 10 years. The goal here is to reduce the carbon emissions for the US by half by 2030. And it's expected to drive 3.5 trillion of cumulative investment in climate tech in 10 years. So it's something, as a US investor, really exciting to see the money that is going to flow in climate tech companies.
And so for the first time, Europe's been caught out by the US in terms of the aggressiveness of the policy. Yair, what are you seeing from a European point of view? What do Europe need to do to get back on the front foot when it comes to leading the green industrial revolution?
Well, I wouldn't be so pessimistic. I think that there is a lot going on in Europe, and I think that, if I'm a European founder, I would now pack my suitcase and move to the US. I think one thing we've learned about the US, things may be turned around. Less so in Europe. I think the ship sailed in Europe. In Europe, we've seen is not the first one to jump, but when it does, then it's big. And with the industrial plan, I think that what we see is the reaction for that. But fairly said, it takes longer. It takes longer. It's not that the Europe didn't do anything. I mean, we see that on the member state level. Each one has been doing a lot of stuff already. And we will see things trickling down to the company level. It's true that the IRA at the moment, if we're looking at direct air capture, for example, or hydrogen, is very, very specific in the amount of tax credits that you're getting. But we will see the same coming in the industrial plan. And the other thing is that if we're looking at industry, that's actually the one thing that is not being tackled by the IRA. So if you're doing something about retrofitting plants, if you're doing about heat process, your place is in Europe.
Okay, so no need to apply for a green card just yet.
Pack your suitcase.
Good to know, good to know. We're focusing a lot on venture, and the conversation when we talk about investment tends to orient always to venture capital as kind of the core thing that everyone likes to discuss and talk about and who's raised what from whom. When it comes to climate tech, we need to build real stuff. And venture capital alone isn't just going to do what we need in order to build large factories or large facilities for direct air capture or these other kind of large physical processes. There are two big issues in the climate tech stack today, as we see. One is in project finance, and specifically project finance around first-of-a-kind or FOAK facilities. Yeah, I know you just came in on the last answer, but I want to start with you because I know you also wrote about this recently following a great piece by USV. If you want to check it out and nerd out about project finance too, you can read that piece. But what are we talking about project finance? What are we talking about FOAK? Why does this matter? And what can we do about it?
So basically, going back to what you said, I think I keep saying that, and people need to understand, and we're here, and the people here understand that because we're in deep tech here, right? CO2 is a molecule, you cannot blockchain it away. We need...
As much as people might try.
Exactly, NFT it away.
Yeah.
We need real stuff, and real stuff, and I think this is what we understood now with the energy crisis. And I know Breakthrough has been telling that all the time, and Veslav Smilas wrote books about that. You need scale. You need a lot of pipes. You need to build stuff. And that means that our founders, they also need to do that. And that means that we as venture capitalists, it's not like we want to see all our money going to CapEx. I used to start my fundraising with the investors. We're going to do the hard stuff. We're going to do the CapEx where nobody else wants to come. Well, I realized I need to change the storyline. But it does mean that and that's what I was writing about, I believe there is a lot of money to be made in these first-of-a-kind plans. We just need to plan the capital structure right. And the founders in the audience, they need to think about that, how they do that, because you're maybe now playing with micrograms or doing grams, but we need to go from the grams to the kilograms to the tons. And that's where we need, yes, some equity, but we need more non-dilutive means of capital, and we can elaborate that as well.
Yeah, so let's just jump into that a bit. So I'm a founder. I don't want to build NFTs. I want to build real stuff that's actually going to help. I prove stuff at the gram and the kilogram scale, and now it's time to build my big facility, my first big factory. What do I do? What are my options as of today? And Eric, I know you have some programs at BEV that support some of this. So what are some of the options that founders have at this stage?
Yeah, in fact, number one, we need to realize that the climate now is not anymore the same. I mean, the financial climate. So it's tougher now for the founders of companies to raise scale-up capital. So. And here is a message in the room to the people who can invest, in fact, who have large corporations, deep pockets. We need to support the demand. For a founder, it's very difficult. In fact, at that time when you have your technology being proven, you have a product, you need to scale up, build a large pilot plant ready for dozens of tons. And LOI, so letter of intent, and MOU will not be enough to raise 50 million. You need contracts, and those contracts are in the hands of the large corporations in Europe. So when you hear what is the climate here right now, which is BASF telling we'll remove our companies into the US. We have Volkswagen saying, oh, maybe 10 billion, not in Eastern Europe, but maybe in the US, Northvolt. So those climate obviously are very difficult. That's why I was supporting a EU strategy, because we need the governments, EU governments, regulations, and the big players to agree. So number one, as a founder, I need a contract. And this demand support will be of paramount importance. I need also simple and easy access to funding. So we have the chance, in fact, in Europe to have some great funds. EIC has a $10 billion fund, €10 billion fund. Maybe make it more simple, maybe more straightforward and easier to get it rapidly. And obviously the regulations. Simplifies the regulations so that what you are doing for the first kilogram is not as stringent as what you will do when you will be operating on dozens of tons a day. So that is obviously the job of VC to prepare the founders, but we have at some point to pass the ball to large players, and obviously corporate venture capitalists are the ones in the large companies who can invest in the company, can be strategic players, will be of utmost importance in the next 3 years. In this financial crisis and energy crisis time, it is very important that we work as one team to support the founders and the entrepreneurs.
Couldn't agree more. I want to double click on CVCs. So corporate venture capital, corporates investing into these startups. Again, it's a nuanced difference between deep tech and climate that you don't have in software. You need these big customers to offtake, to come in and get involved. How can startups in the space think about effectively engaging with corporates? Should it be through CVC? Should it just be direct as customer? If it is CVC, what stage do they want to come in at? And what are some of the risks of getting some of these big players involved in your company early? Laurie, maybe what have you seen in your experience?
Yeah, maybe I'm a bit biased here. I used to be a CVC in past life with BASF. CVCs, I think, very interesting group of investors. I mean, just if you look at the amount of money that they are deploying, it's roughly half of venture capital funding that comes from CVCs. So it's actually quite big. And here, I mean, you talked about here earlier, for climate tech, I mean, we need physical solution. We've damaged the planet physically, so we need physical products. And CVCs mainly come from industrial sectors. They have the expertise, they have the technical expertise, market understanding, so they can bring lots of value to companies. How to engage with CVC, it's a bit case by case. I will say getting in touch with kind of CVCs or the corporation as early as possible is good because, again, I'm talking from experience. CVCs may not be the fastest in terms of making investments, so it takes months, takes years sometimes to get funding from them and to get partnership going on. And I think CVCs and corporates in general are quite interesting because they are potential acquirer for climate tech companies. Just looking at 2022, 75% of the exits were through acquisitions, and mostly from industrial companies. So having them on board as early as possible, starting to develop partnerships with them as early as possible, I think is very important.
Jonny, maybe I'll give an example. So if we look at the scale, we have to work. I mean, there are funds that say, oh, we don't work with oil and gas. These are the bad guys, right? But at the same time, these are the guys that know how to scale. And by way of example, we invested in H2 Pro and together with Breakthrough, and they're currently at the status that they're doing 10 kilograms of green hydrogen a day. Now, the biggest refinery, it's an Israeli company, the biggest refinery in Israel is doing 10 tons an hour.
Bit of a difference.
We need to scale, and we can only do that with the people that know how to scale, and therefore the CVCs.
Yeah, I think that industrial experience and crossover is also quite unique in the climate tech world, right? And there's also a lot of people who have maybe spent their careers creating a bit of a mess, who probably know a lot about helping us clean it up as well. And we shouldn't sleep on that by any stretch of the imagination. I just wanted to circle back on one thing, Laurie, because I know you were on the CVC side and now you're on the private VC side. Just one very simple question, which is, what can corporates learn from private venture to be easier to work with and maybe more aggressive or more founder-friendly when it comes to being corporate venture? Just quick thought on that before. And I'm assuming they're not as friendly, so maybe you could tell me the
speed of investments.
Okay.
Having less processes internally and perhaps being able to move faster on deals, because often we see kind of closing for deals that are delayed because CVCs need to have their investment committee, which is sometimes only every 2 months. So having easier internal processes and also team dedicated to bringing value to the portfolio companies, their portfolio companies, in terms of reaching out to internal technical experts who can help, as you mentioned, scaling up some of those processes. And there are some new CVCs that are starting to put those teams together, where you have part of them doing investments and part of the teams then kind of bridging the gap between the corporation and the startup companies. And I will say ultimately it's also having this financial mindset. Some corporate VCs are really focused on strategy for their parent company. I think ultimately having this kind of financial hat and focusing on the investments that are going to be financially successful, I think that's the best way to have a strong strategic impact. Because if the companies are selling broadly to the market, they are going to learn even more and potentially have more success.
Let's talk about financials moving forwards in topic. I know your colleague Gaëtan, his favorite joke is before climate tech was climate tech, it was clean tech. But now we don't call it clean tech anymore because that didn't work out so well the first time. So we're trying again under the new brand of climate tech. One of the big challenges last time was that a lot of these products were coming to market with a significant green premium. I mean, there were lots of other problems too, right? But one of the problems was they were coming with a significant green premium. Let's talk a bit about unit economics and the green premium. How do you think about green premiums with these early stage companies? Is green premium still a thing? Can it be a thing? What should founders be thinking about in terms of cost differential between what they're producing and a fossil alternative, for example? And yeah, I know you said green premiums aren't really a thing anymore, so I would like to hear from you first.
I think Bill Gates did an amazing job in coining the term green premium in order to really explain the fact that some of these things come with a premium. The problem with that, and I think it did a great job, I think by now what we need to do is drop the green. Because when people think about green premium, they think about something that is always there. Yeah? If I'm going to buy an organic apple, I will always pay a green premium. Yeah? And same goes for green hydrogen. There will always be a green premium. But in fact, what we see is the cycle of any technology. Any new technology comes into the market with a premium. Over time, that technology will not survive if it's not going to come to price parity. So everything we invest in, we have to see the path to price parity without subsidies. And I think this was the mistake that we've done. I think the No Hair shows that. In Cleantech 1.0, that we basically relied a lot, especially in solar stuff, we relied on the feed-in tariffs.
But solar's been on a great trajectory since then. I guess. So maybe that was one of the good things that came out in the end. But no, point taken. And Laurie, I know you're big on unit economics. Tell us about how you assess this. What do you think about green premiums?
Yes, I think we are even tougher there. We only invest in solutions that are going to be 2D, at least at cost parity, with incumbent technologies on the market. At least at cost parity, if not even cheaper. We always look at the energy mass balance of the solutions that the company is developing. And for us, if it ends up being already more expensive today, we won't invest. Because ultimately, yeah, people care about green solutions or sustainable solutions. Are they willing to pay something more expensive for them? Maybe some, but the majority is not going to pay something more expensive, especially when we look at industries. I mean, talking to steel makers, talking to the mining industry, chemical industry, people are not willing to pay a higher price. And so I think on our side, that's really our focus. And because of that, there are areas we don't invest in. Typically, direct air capture today, I think, is economically very challenging. Just trying to suck CO2 out of the atmosphere. CO2 is extremely dilute. At least so far, seeing the results from some of the companies, we are talking, I mean, if we really want to be net zero, we will be talking about quadrillions and quadrillions of dollars in order to achieve our targets. So it's, yeah, an area we don't focus in.
I just want to pick up on that point. And Eric, I know BV are known for deploying very aggressively. You kind of led the recharge of climate tech with the first $1 billion fund. But when we're thinking about coming to unit economics, these projects aren't going to achieve good unit economics immediately, right? At the kilogram scale, they're not going to be where they hope to be at the ton scale. So as an investor in the space, when founders are coming to you, how do you think about assessing progress relative to the raise they're looking to do? How do you get a sense of whether they have the potential to go the distance in the long term? Because by the time you're investing in them, they don't have the economics today. It's a question of whether they can get to them in the future. How do you think about that as an investor, and what can founders do to help you go on that journey successfully?
Yeah, number one, we need to know and be aware of what is the economical progress of the peers, basically. And if you have in mind what is usually the impact of the experience curve, you've heard about that, obviously. When you double the volume of production of whatever good, usually in former industries, the gain was about -10 to -20%. So each time you produce twice more, the unit production cost decreases by -10 to -20. That's what we see, in fact, in battery industry. But what we have seen the last 20 years for wind and solar is even much higher. It's a -37 to -39. So whenever a Chinese producer is doubling the volume of production, is having a gain cost, a cost in gain that is -37%. So the starting line is not at all the same. So it matters to be the first. That's why we are betting on in fact, entrepreneurs who have breakthrough ideas. Number one. Number two, scale will matter. So at Breakthrough Energy Venture, we only invest in companies when we think that this technology will have an impact of at least 0.5 gigaton equivalent CO2 per year at scale. 0.5 gigaton equivalent CO2 per year is the equivalent of Scope 3 for Exxon today. So it's massive. It's about 1% of the problem in 2050. So that's our way to solve this problem. Number one, be aware of what are the economics in the industry and what is the dynamic to make it happen. Be bold and have breakthrough technologies patented. And three, help them to faster scale up. And for instance, we have also, I'm working for Breakthrough Energy Venture, which is a for-profit fund, but we have also some non-for-profit, Breakthrough Energy. And we've just made a donation of $50 million to a company, Lanzatech, doing sustainable aviation fuel, so that they have their first pilot plant. So we can accelerate because we know volume will matter right now. And this progress that we see in industry on this experience curve is because now we're using not only development process, but digital and a lot of knowledge that we gain. So it's important to be the first.
Maybe I'll share a secret from our own playbook. We only invest in companies that we see that we can help them sell what they don't have. So basically, we understood that if Elon Musk can sell you a car, you pay for the car, you don't know when you get the car for a few years, and you may get the car sometime, then we can do the same. Our founders can do the same. And basically, what we've been doing with many of them now is starting Tesla-like contracts that we tell the potential customers, hey, are you interested in this? If yes, put a down payment, a deposit, and show us that, yeah, there is a need for that. And this is one of the things that we always have a challenge to make sure that indeed the market wants what those entrepreneurs, even before they build the first of a kind, before they build the large scale, right? We have to see there is a market. And we've done that with one of our portfolio companies, Reverian, for example, and within 2 quarters, they've reached over 50 million in order books. And it's not unique, I mean, but you have to do these things, and you have to have this mind that, yes, I can sell something that I still don't have.
Let's talk about that specifically in the context of carbon removal, because that's probably one of the most interesting topics in our world, is that there are all these companies that are building technologies to remove carbon from the atmosphere in various pathways and different technological approaches. But that's not a huge existing market today, right? There's also a big market bet on that. So when it comes to CDR and CDR companies, how would you go about getting those first order commitments, and how do you think corporates can also play a role in helping that market accelerate, because we're going to need it, right, by 2050?
I mean, specifically CDR. I mean, I know Laurie said it's a way to go, but that's a real great business. I mean, our company Repair that is doing direct air capture already sold its entire capacity till 2028.
How much was that, for context, Yair, the capacity that they were selling? What was the offtake?
In several tons.
Okay.
Yeah, and they can sell more. At the moment, the demand, and this is again, yes, true, the price is high, and it's not going to be the price, it's not going to be viable later on if Frontiers or Stripe are not going to buy those credits, and others, Microsoft, for example. But at the moment, there is way more demand than supply. So all these companies can sell for the very good near future 5 years stuff that can help them finance the first of a kind. Yeah.
Great, thank you for that. Laurie, what's your take? Carbon removal. How are you seeing that market? Are you just not bullish on? I feel like I'm calling you so bad. Are you just not bullish on DAC, or you're just not bullish on?
Not bullish on DAC because of the unit economics. I understand the demand, but yeah, unit economics don't work for us. Point source capture, maybe, depending on the technologies. Biological sequestration, I'm excited about it, because when you look at the cost of biological sequestration, it's 100,000. Even more X lower costs than mechanical approaches. So excited about that. But I will say in general, I'm more excited about a bunch of topics we don't talk enough about. When people think about fighting climate change, it's often about carbon removal and buying an electric car and installing a solar panel on the roof. But actually, the sectors that have the greatest potential in terms of reducing carbon emissions and restoring ecosystems are the ones getting the least funding. 80% of venture capital funding goes into transportation and energy, but there are sectors like steelmaking, for example, responsible for 7% of carbon emissions. There is cement making. I mean, when we talk about buildings, we don't talk enough about building, but it's often about heating and cooling, but actually cement, it's 8% of carbon emissions. There are also the heat processes in the chemical industry, for example, and food and beverage. Also a large chunk of emissions. And then agriculture and food. If we are looking at the next 20 years, because mostly in agriculture it's methane that is emitted, not carbon, and methane is 25 times more potent than carbon, we are talking about 30% of carbon emissions there, just with agriculture and food. And so those are the sectors, kind of untapped sectors, I'm really excited about.
Let's continue on this thread. Eric, 2023, who are you looking to knock at your door? What are the projects you're looking to invest in? What are the areas that get you excited in climate tech coming up this year?
In fact, we're interested in all sectors, and as you said, there are some sectors that are basically underinvested. Agriculture and food, it's right. So we are in fact supporting fellows, young students and young entrepreneurs. So not only through BEV, but also a program that is called BE Fellows, where we provide up to $4, $5, $6 million to a founder, an entrepreneur, helping him to create that company. And obviously, this is a theme we are very interested in agriculture and food. You mentioned construction and buildings. In the IRA, there is a subsidy of $30 billion for new construction buildings. So it is important that Europe, and that's a focus for us, has a strategy, a united, coordinated strategy, as opposed to a competition of national races. It is very important that together we understand we will be stronger. So the 27 united will be much stronger and will need to support, in fact, the entrepreneurs, the founders, investors, so that the citizens, in fact, have the choice at some point to support this climate tech strategy. So we are very active, in fact, in investment in all these sectors, maritime, all of it, as I mentioned, in the 5 areas. We're also active in fusion. We're active in many areas that are breakthrough, of course, but also calling for a net zero strategy at EU level will be key.
Yeah, what gets you excited this year?
It's not just this year, but I think that we're in a very interesting point in history. Basically, if you look backwards over the past 1,000 years, but let's say the past 100 years, we've progressed slowly on a very certain pathway how to use energy. And it was always we go on the stuff that is from biomass to coal, from coal to oil, from oil to gas. And the reason is because it's convenient and the energy density is just great. It's really fit for the purpose. So now we're at the point that we are actually going backwards because we're starting to use solar, wind, and things that are having less energy density. So the stuff that we've been doing before, we cannot continue doing them as we did before. So for example, if on chemical processes, and that's to your question, you know, previously every chemist here in the room knows that how do you solve stuff with heat and pressure. Didn't solve, more heat, more pressure. So now we look what does that mean, for example, on the Haber-Bosch, yeah, that the stuff that we've been doing before that was creating ammonia, we cannot do that anymore. It doesn't make sense. So we see a shift, and that's what I'm very excited about, stuff that was previously thermochemical processes, that now we replace them with electrochemical processes. And we see that across different sectors. From hydrogen is the best one. How do you produce hydrogen today? SMR, yeah? Steam methane reform. How we will do hydrogen in the future? Electrolysis. How are we going to do ammonia? Same. So this is something that we see across the board on different aspects, that we need to reinvent the stuff, how we do things that previously we had a simple answer. We just did more heat, more pressure, energy was cheap. This era is gone.
And on scaling up this new set of solutions, what are some of the blockers to doing that at scale? You talked about energy or baseload energy or consistent power. Metals also been a huge topic recently, and actually the resources we need to make some of these transitions and to scale some of these existing infrastructure to the level they need to be. What are some of those blocking areas that we need to pay a lot of attention to if we're going to successfully do this transition in time?
Yeah, when I was speaking about the EU in a net zero strategy plan, as United, the critical raw material plan is of utmost need, obviously. We need to realize what we are facing. In the industries that are more mature, so wind, solar, 70 to 90% of the supply comes from China. If you have a look at the critical raw materials that are needed, it's about the same. So it's very important that Europe is putting in place rapidly today a plan so that we can avoid the consumption of those critical raw materials, strengthen the supply, protect the recycle of it. So all of it, we have to be together working on it.
We had a question as well from the audience, 2 different questions that I just wanted to try and incorporate on the spot. So let's see how this goes. Some questions around topics of climate justice. So how do we make sure that things aren't just great for the West and maybe not so great for the developing countries that are going to suffer the most? What can we do as investors and founders to make sure that happens? And also in terms of diversity justice, gender balanced teams, for example, in deep tech is historically always a problem. What are some of your thoughts on either of those topics? And we haven't prepped this. This is completely cold, so let's see what happens. What are your thoughts on those two like really easy to solve problems?
Meaning the rest was prepared, huh? You hear that?
Yeah.
And you said diversity?
Diversity and climate justice, yeah. Diversity and climate justice. Just to you know.
On our side, climate justice is a key topic for us. One of our 3 partners, she spent almost a decade in Africa. So for each fund, we have kind of an internal mandate to do at least 1 investment in Africa, and then invest in companies that can serve also developing countries. But I'll let my colleagues maybe talk more about that. Maybe on the diversity point of it, we definitely need to solve that. In venture capital in general, there is very low diversity. So in our case, what we've tried is really to build diversity as part of the DNA of our venture capital firm. We have 2/3 of women and 100% diversity in the team in terms of ethnicity and sexual orientation. And so because of that, the deals that we source and the companies we invest in are diverse. We have over 50% of our deal flows that comes from and that are represented by underrepresented funders. And same in terms of investment, we have 50% of our portfolio companies with underrepresented funders. So they are out there. Diversity is out there, but it's just a way of sourcing them and having a different lens when you look at those deals, because those people are going to pitch differently. A woman is going to pitch differently than a man. So just being aware of it, I think, makes a big difference.
I think we started our fund with, if you wish, on a mission for climate. So climate and CO2 we already said, so there is very much clear view that we start with emission reduction potential, the carbon math. But it's very important that we are not going into this carbon tunnel view, that we don't stick to just, oh, this is all about carbon. And as an article also, generally, but also as an Article 9 fund, what we've done is embedding into our investment process other elements like the do no harm, ESG, safeguards that the companies are fulfilling. So to make sure that we're solving a problem today, we're not creating the problem of tomorrow. And this is a very important principle. So we look at where are things being sourced, how you do cradle to cradle, so you build new stuff, how do you recycle these things. If you can do retrofitting, this is much better than building new things. And this is all embedded into the entire investment process and life cycle of the investment.
Yeah, thank you for those good words. It's a key. I mean, justice is at the core of what we want to do. I'm a medical doctor, and I entered into this field of clean tech. And there's no border. In fact, we are all united on the planet. And we announced, in fact, that Breakthrough Energy Venture last November, and a summit that we organized in Seattle, that not only we will invest in climate mitigation, so what we do to decrease, in fact, the emission on decarbonize, but also on adaptation. It is very important. We must realize as human beings on this planet what is coming towards us. Between now and 2050, 2/3 of the harbors of this planet will be facing twice a year a storm or climatic event that has the potential to destroy them. So you realize how disruptive it will be. We're talking about starvation, we're talking about water scarcity, we're talking about the yield for crops that will decrease. So on all of these topics, we are considering investments, or we already made some investments, and we'll make more of them. Because you're right, we are all in the same boat.
We are, and we need to save the boat. Right, 20 seconds left according to this TV screen in front of me. What's one parting thought that you want to leave people with today from this session? Can be a thought, can be a piece of advice, or a nugget of wisdom, or none of the above, depending on what you prefer.
Now is the best time to build a climate tech company.
And we'll end there. Thank you so much for listening.
Thank you.
Thank you all.
Thank you.
Eric, Yair, Laurie, thank you.